Hello, everyone. Lovely to be here, and sorry I was a little bit late. My name is Tiffany, and I'll be your moderator for today's panel. Before we get started, let's do a quick round of introductions. So maybe, Rania, you can introduce yourself.
Sure. Thank you, Tiffany. Happy to be here. Hi, everyone. My name is Rania, and I cover sales for APAC for Ondo Finance. We are the leading provider of tokenized U.S. Treasuries. Just crossed 600 million in TVL last week in this $2 billion market. And yeah, happy to talk more later about what we do.
Hi guys, my name is Justin. I'm from the Injective team. I oversee and head up all things on external and ecosystem for us. Injective, if you don't know, elevator pitch for 10 seconds. It's a blockchain built for finance with a decentralized order book at the infra layer of our chain. I'll get into the features and functions of Injective later on.
And last but not least, my name is John. You can call me JP. I'm the CEO and founder of Mantra. We're a real-world asset layer 1 built on the Cosmos SDK, launching mainnet very soon. But the project's been around for about 4 years now. Token's called Ohm. Very, very chill. And you can find it on major exchanges like Binance, Bybit, OKX, etc.
Cool. And I guess lastly about Plume, we are a new EVM chain dedicated for real-world asset. We recently raised a 10 million back in May, led by Han and Galaxy Digital. We currently have over 150 projects in our ecosystem, and very happy to chat today. Cool. So let's get started and talk about RWA. So in the general landscape, while we're in Korea right now, tell us a little bit more about how you guys see the APAC region and what is kind of like the opportunities and challenges specifically in APAC and how that's different in the broader field. So maybe Rania, you can go off, start.
Yeah, definitely. I think just in the context of South Korea, I think the appetite and demand for RWAs is definitely growing. I kind of heard that the first ever global RWA summit just happened last week.
Oh, wow.
Yeah, I think we have some people here in the audience today who helped to organize that. One of the largest of asset managers here in South Korea, Mira Asset Management, recently also kind of announced a partnership with Mina Protocol, and they are also looking to RWAs, STOs. So we definitely are seeing, I think, a lot of institutional interest as well as demand in this space. I think what makes RWA particularly appealing to a lot of people is we're playing at this intersection, I think, between traditional finance, something that people are maybe a concept that people are more comfortable with, as well as this kind of new world of crypto, blockchain, and DeFi. I think in terms of where maybe South Korea is a bit different from the rest of the world is perhaps the lack of regulatory certainty at this moment. So some other countries like Hong Kong, Singapore have come out with a stable coin sort of framework. That's not something that we see today, but hopefully we will with this growing interest.
I'm going to speak on the pros of engaging in APAC, less about the challenges, because I feel like the challenges everybody...
Keep it positive.
Keep it positive. Everybody have different views on what the challenges are. But the way I see how RWA intersects with APAC is fairly simple. I mean, you look at APAC, the countries within the APAC region itself, you have countries that suffer from high inflation rates all the time. You've got Sri Lanka, you've got Laos, you've got Cambodia, people that fundamentally, at a core level, they want to have exposure to other forms of assets. So let's say US dollars or Europe, EU dollars or even British pounds. These are currencies that they want to hold, but there's a lack of exposure for them because even for someone like myself, if I want to trade anything on the US stock market in Asia, I have to go out there, apply for a TD bank account, go through a very tedious KYC process. When it gets approved, then I get exposure to the New York Stock Exchange. Then I can buy S&P 500, for example. Where I see APAC coming into this fold is, hey, for RWAs to be on chain, it means blockchain, finance intersects with each other. It's finance for all. That's the core principle of Injective. It's to bring finance to everybody, no matter where you are in the world. Finance should and always should be a product that people should be able to access from any parts of the world. So if today I'm able to bring, let's say, Ondo's USDY to someone who's in Laos right now, just by simply engaging with Injective, that's something that I feel like we all should be trying to achieve. And that really, in my opinion, how we can target, high inflation rate countries who should be getting exposure to other alternative assets is one of the main goals that we're trying to set forth and accomplish.
So I'll use a little bit of a perspective, not just APAC, but comparing and contrasting a little bit our strategy. So Mantra is primarily between Hong Kong and Dubai. I live in Hong Kong, but a lot of our investors are based in Dubai, Abu Dhabi, UAE, etc. our current testnet is called Hongbai testnet. We're launching a new testnet next week called Dukong. So you can kind of see the Middle Eastern and Asian influence in what we're doing. And we're actually seeing a lot of proliferation in the Middle East of high-quality assets coming on-chain because there is a clearer framework about how you can actually operate compliantly and legally for issuing of RWA assets. Over here, it's a little bit different because you have very, like, for example, in Hong Kong, it's a small market. Singapore, small market, at least from a retail perspective, right? Maybe on an institutional level, it's interesting, but retail not really so much. So the idea, to Justin's point a little bit, is like, how do we create a issuance of assets that can then be globally distributed? And that's a challenge. So we see this almost like as an asset class by asset class, country by country model. And you almost have this like matrix of which are the countries where I'm like I need to ask for permission to do this versus which are the countries that I'm cool with asking for forgiveness later. And obviously it really just depends on where your team is. Like, are you American, et cetera, right? So that's one of the unique challenges I think of real world assets. And I will give a little bit of a plug to a kind of like Korea-ish project, which is Story Protocol, which has done a lot this week. Obviously, they announced a lot of fundraising. SY and Jay-Z have been doing a lot of stuff with respect to like IP, which I think is a very interesting real-world asset. Korea is a great market for that because you have really high-quality IP and culture, Blackpink, BTS, like all these K-dramas. Like my wife's Korean, so I am like bombarded with that daily. So I think there's an interesting opportunity here, which is not necessarily in the traditional sense of real-world assets, like treasuries or real estate or financial products, but actually more like culturally driven assets, which are frankly sexier and maybe a little bit more interesting for like crypto natives.
Definitely, I think that's a very good point about RWAs, is that we're actually entering a new era of that's just outside of like treasuries and stablecoins, and Plume is also all about that with the different asset classes that we're tackling. But kind of bringing it back to like the compliance and regulation side, for Ondo, you guys had a lot of success this year. I see the PR pieces like rolling out like every single day almost. But I really wanted to touch on one with like BlackRock and their Biddle fund. Could you talk a little bit more about that partnership and how you kind of see like the compliance and regulation working with them? What is that like? And tell our audience a little bit about it.
Yeah, definitely. Thank you for the shout out of Ondo. I think we've had great partnerships this year, obviously with Plume, Mantra, and Injective as well. So just take a step back. Ondo primarily has two different products. The first is a retail-facing product called USDY. What we essentially do is we pay out 5.35% APY, and the yield all comes from like US Treasuries. The second product, that Tiffany you touched on, is OUSG. It's an institutional-only product, and that basically is like our tokenized wrap version of the BlackRock Builder Fund. So approximately about half of BlackRock Builder is actually come from Ondo OUSG. And how this partnership was really born off is actually like we saw the need of obviously having a big name like BlackRock come into the space to lend legitimacy. I think that definitely piqued the interest of a lot of like mainstream media and how Ondo also partly made our name. But at the same time, BlackRock themselves are not really crypto-native players, and they lean on the expertise of people like Ondo, who are essentially like their crypto-native rail. So I think, to address the elephant in the room, some people just say, well, why won't I just buy BlackRock Builder directly? Why do I have to go through Ondo? It's simple. Still for BlackRock, as a institutional fund manager, you need minimum of 5 million commitment, and I don't think that's very accessible for people. To Justin's point earlier, I think what we're trying to do with RWA as well is, enable financial inclusion for the masses. So with Ondo OUSG, for example, the minimum subscription is just 5,000. But yeah, that being said, it's still an institutional product, so we are always taking a compliant first and reg first approach. So we still do all the relevant like KYCs, whatnot, but we at least lower the barrier to entry. We're on multiple chains, and OUSG itself, I think we stay true to our like DeFi root. It's composable and permissionless. You can actually use OUSG, the token, as a collateral on Flux protocol. So that enhances the utility, and that's not something that you can do in like traditional finance.
Yeah, I really like that perspective, bringing more of the financial products to a lot of people. I think that's a lot of the Web3 that we talk about today. But maybe going to like Justin, you guys recently entered the RWA space, I believe. Can you talk a little bit more about like how, as a new player in the space, in the RWA space, which we love, by the way, how do you guys deal with like compliance and regulations yourself?
Oh, it's a loaded question. My general counsel will give me a lot of heat if I don't
Hopefully
answer this the
they're
right
not
way.
looking at this right now.
But the way we look at it is, as long as every product that we launch, we're obviously abiding by the laws and regulations of, you know, us having our headquarters in New York really, really binds us in terms of what we can do, what we cannot do. But
Second that.
I mean, you must know about that as well. But in order to answer your question, compliance and regulations, the way that we see it, as long as we are launching products that are fully on-chain, fully transparent, to my knowledge, we should have little to no issues when it comes to any sort of backtracking. Hey, like, is Injective doing anything that's murky or in the gray zone? We're really trying to make sure that everything that we launch, like, actually, just piggybacking off of what you just said, shameless PR over here, we launched our own BlackRock, build a product on chain yesterday. And this is all stuff that we obviously, like Ondo, are doing in a very, very healthy and completely legal way. But to answer your question, making sure that we're geo-blocking the right countries, you know, making sure that the products are not accessible to certain people, going against the ethos of what I mentioned, my first answer, right? But unfortunately, that's the truth of the reality, that we still have to operate within certain guidelines. Until things change, that will still be the way that we operate by.
Yeah, I think that's very valid. It's definitely very tricky, and I'm like looking forward to kind of next couple of months and the years on how like things will play out. But you know, to JP, you know, you guys talk a lot about like the permissionless chain. Talk a little bit more about what that really means and like how you guys deal with compliance in that way.
Absolutely. So I think it's really important to understand that at the protocol layer, we don't really see tons and tons of the application of regulatory enforcement at a chain level, unless you're selling tokens. Like if you're selling tokens, like that's where the regulators care. But in terms of where they really care, it's like how are these things distributed, how are they traded, how are they on and off ramped. So it's more at the application side, right? So exchanges, dApps, et cetera. We both take a protocol and an application approach. So we're building a layer one, which is permissionless on the Cosmos SDK, as I mentioned, but it also has a permissioned layer. So that is up to the applications in the permission layer to enforce, you know, who gets permission to what application, right? And that can be done at the token level, the platform level, the user level, et cetera. You can create a very customizable governance framework on how you can actually interact with these assets. So you can say, okay, even though these are on chain, and I can access it via my normal permissionless, Kepler, Leap, MetaMask, whatever wallet, Trust Wallet, et cetera, I'm not able to interact with it because I've got a decentralized ID connected to my wallet that says I'm American, so I can't touch anything, basically. So you kind of have this ability to both interact with the crypto native populations that are obviously more keen to have like a permissionless DeFi experience, and at the same time, within a walled garden of sorts, you can actually issue and have provenance of these real-world assets, whether that's real estate, funds, IP, whatever, that could then be effectively interoperable and transferable across into the permissionless layer, and then they can interact within DeFi, within IBC. Obviously, we could connect with Injective, for example. I'm sure we will. And that gives a lot of composability to these assets that it hasn't happened before, right? So you need to really have this like frictionless ability to go back and forth. That being said, provenance always remains in the permission layer, and if you ever wanted to come back to like own the asset, you would have to, even if it gets sold, right? Like to another person, they'd have to onboard properly into the permissioned area, then be able to actually like redeem it, for example. So if you like buy a tokenized stock and it goes out into the Cosmos, Ethos, IBC, wherever, if you want to come back and actually get the stock, you would have to come and onboard again. That's kind of the idea.
Yeah, that definitely makes sense. And kind of talking back, you mentioned that you're a layer one, and so what kind of are the products that you're like tokenizing? Walk us through some of the projects that you're working with in terms of the tokenization and how you guys think about that.
Absolutely. So we're looking probably like three main areas. Real estate would be one, fund or like financial products, so money market, private credit. I mean, money market, we're a partner with Ondo, USDY. Private credit, private equity, VC funds, and then I think the third one is IP. So we're in talks with Story. We'll see how that goes. But these are probably the three main things that we're interested in. Honestly, at a chain level, we're agnostic, right? Like if someone wants to come and tokenize whiskey or Pokemon cards, like we'll obviously entertain that conversation. But where we're seeing the lowest hanging fruit is within those three sectors, and definitely the most traction, right? So we announced a large $500 million deal with a real estate developer in Dubai for an off-plan development, I guess about 2 months ago, and we have much bigger in the pipeline. So obviously these things are like, real world assets can take size, like proper size, which is a good thing. And it's also, I think, when it comes to real estate and funds, for example, it's something that people understand very tangibly. It's a massive market already. And of course, if you're going and talking to our institutional investor network or high net worth investor network, like they're already interacting with this stuff anyway, right? And they're more than happy to have more access to these products, maybe the promise of a little bit more liquidity for some of these things. And of course, if we're going to be incentivizing certain products with our token, enhanced yield. So in the case of this real estate offering, like it's $500 million basically convertible like debt like note, paid 8% in stablecoin. We're incentivizing additionally in Ohm, an additional like 5%. It's like triple over collateralized with the land, with the corporate credit of the issuer, and like a massive mega mansion in Dubai. So you're getting like this exposure to the financing upside of the development, and then you can actually like basically transfer that into the equity of the home at a discount to the present value at the completion of the project. So like these new financing structures are really cool. It's a safe product, and for an institutional investor, 13 to 15% is pretty freaking awesome, particularly if it's like being basically guaranteed. Maybe not as attractive for like a crypto degen who wants like 50% or 5,000%, but you see what I mean. It's like it's a lot easier sell to the people who are like, okay, I'm already buying this stuff. I'll take an additional 3 to 5% all day.
I think that's a very good point. At Plume, we really see like in the RWA space currently, it's a lot of like TradFi, people bring TradFi products on chain, but we see a new era called RWA, which is giving in TradFi a DeFi upgrade, which will bring in new composability, a new era of like a new asset class. And with Rania at Ondo, I was actually reading your blog post like last night a little bit before this.
Good bedtime reading.
Bedtime reading. I didn't go out and party. I just was in bed reading. And so, congrats on USDY, being a little bit over a year old now. I think you briefly touched upon it, but can you expand a little bit more of it and, talk about tokenized treasuries and what that really means and what other maybe asset classes you guys are looking into?
Sure. So yeah, we just marked our 1-year anniversary for USDY and just crossed the 600 million mark. Thank you. As I mentioned, in this like kind of 2 billion kind of market that we see today. So USDY, I think what is really unique about it, it's a yield-bearing stablecoin essentially. So we pass on the safe, stable yields that comes from U.S. Treasuries. We bring on these like institutional grade protection that we see in traditional finance. What that actually means is like the way Ondo USDY is set up is actually bankruptcy remote. And that is how we're a bit different from some of the other stablecoin providers like that we typically see today. What this really means is in the very unlikely scenario that Ondo Finance goes down under, your money is always protected because it's always like ring fenced. And this sort of like kind of bankruptcy remote protection is not typically seen in the world of like blockchain, crypto, and DeFi. But at the same time, we stay true to our like DeFi roots. While USDY is on multi-chain, including on Mantra, including being integrated on Injective as well via Noble, and you can use this for many different kind of purposes, including as collateral on DeFi, such as on Drift Protocol and Solana. What this actually means today is like, as a perpetual trader wants to actually execute a trade, you need to open a position and kind of maintain a funding rate. But if you use that using stable coins, you're essentially putting a lot of capital up front and actually losing out on like obviously other things that you could do. But with USDY, this 5% actually offers you to offset this funding cost, and depending obviously the size of your position, this could even result in like millions or billions of dollars in saving every year. And that's really what I think is why personally, I'm very bullish about RWA. I really love kind of what we do because we really, I think, bring the best of both worlds that we see in like traditional finance, as well as this like utility, composability in DeFi as well.
Yeah, I think what you say really makes sense. At Plume, we always talk about composability and RWA, TradFi, and DeFi all together. So I think there's a lot of synergies there. But moving on to Justin, you guys talk about you guys are like the fastest blockchain in the space. You guys are like speedy AF. How does this like help RWA projects? Maybe you can like talk us through some of the projects that you're working with, and how why Injective.
I'm gonna take a counter approach to this. Sorry, but I personally think at this point in time, people don't care what your block speed is anymore. People don't care how many TPS you have anymore. Everybody is mature enough, technology is mature enough for people to oversee that. Realistically, what is 100 milliseconds difference in latency going to really make a difference on? So I'm going to talk about something else, which is the core features of Injective, other than being fast, other than having instant finality, really is at the end of the day, having that order book that serves the underlying layer. So what I mean by that is, earlier this year we made gold and silver available on chain. So now, like going back to my initial answer, how can we have people from anywhere across the world to get exposure to gold and silver, British pounds even, euro, USD, without having to be from that specific region itself? And before we even get there, these are all products that we're building on top of the order book. So meaning, instead of trading in, you mentioned Jupiter, I think, or Drift, right? Instead of trading in an AMM environment where it's obviously very MEV prone, you could come on board to Injective, trade on an order book that is facilitated by 30+ market makers. We're very fortunate to partner with some of the people that's sponsoring the event today. Selene Digital is one of our top market makers for our order book itself. So what you can expect when trading on Injective, whether that's just spot and perp trading the way that you usually would do on crypto, or if it's something like trading gold and silver or trading, Ondo's USDY on chain, this is all done in a stable environment that's, funneled by a price feed by Pith or Stork. That's a new Oracle provider that we're working with. And with a really deep institutional grade liquidity that's supported by Galaxy Digital, Selene Digital, Selene Capital, et cetera, et cetera.
Yeah, that's actually, that was actually a very good answer. I love that you kind of pivoted about the fastest blockchain, and you kind of still talked about the RWA side of it. But I think we're almost actually running out of time, so let's speed run these through the next couple of questions. And Web3 is not anything without its community. Everyone talks about community managers, growing their communities on Twitter, their Discord, making sure that they're not hacked. I think it's a big deal in a lot of these projects. But with I guess to Ondo, you guys in your community, you have both the institutional side and the retail side. How do you balance the two and keep both sides happy and kind of improve the communities further on?
Yeah, so I think what's the most important, of course, is having a strong product market fit, good branding reputation, compliant first approach, everything that I said on earlier. I think with the nature of what offer tokenized U.S. securities, I think that's something that both retail, institutional investors both find kind of have a strong demand for. I think what also definitely helps is, as you mentioned, this community backing, and I've heard kind of South Korea has been one of our kind of biggest markets. So we thank you everyone for the Ondo, Condo, or I don't know what other things are going viral as well in this space. So I think, yeah, we lean on your continued support to help us grow this community, this brand as well.
Sorry about that. Yeah. Okay, maybe moving on to a JP actually. You guys have been around for 4 years. I think you mentioned that in the beginning. How do you guys, manage your community over the years? Especially, you guys focus a lot on the compliance side, the permission side. A lot of people in Web3 aren't huge lovers or believers in kind of the KYC aspect or the compliance piece. How do you guys deal with that and continue to push towards a more vibrant community?
Yeah, so I mean, having built a token project for 4 years, obviously there's been a lot of ups and downs. It's never easy, particularly when the markets are shit and everyone's pissed off if the token's down. You just kind of got to stick through it and continue to be front and center. I mean, I'm constantly interacting on Twitter and in the Telegram, literally all the time. I enjoy it, but
Yeah, me too.
Yeah, but not everyone does. And that has built up a lot of trust over the time. And honestly speaking, I think people respect the fact that we didn't just quit when our token was down whatever 90+%, and this year we've been literally, I think, one of the best performing tokens in the entire space. And it wasn't easy, but you just kind of have to stick through it because you owe it to your community. I really feel like it's my responsibility to them. I sold a token. We've basically gone public, so you got to own that shit and deal with it. That being said, the one thing I would say about KYC is I actually think, from a crypto perspective, I don't think people actually don't hate KYC. I think they hate doing it a lot. And if you trade on any centralized exchange, you do KYC. It's just a factor of life now. And if you've seen the proliferance of KYC on centralized exchanges over time, back in the day, you didn't have to do KYC to get on exchanges. And I think as you have started to have to do that, you've seen institutional adoption, increased liquidity. The space has grown leaps and bounds in that time. Right? Obviously, that's a factor of a number of things, but I do think that's an important part because it does build trust with institutional parties who want to participate in the space and now feel like they have the confidence to do so. So where we take it is like, okay, let's try to focus on creating a very simple, easy to do KYC experience, not at the chain level, at the application level. So you can participate in our ecosystem without doing KYC. But if you do KYC, do it one time, and then you can passport that KYC to all the dApps, all the different products within the ecosystem, and hopefully even across our ecosystem, maybe even with Injective or other chains to have like this really truly passportable, decentralized ID basically.
Yeah.
Maybe with Plume too.
Exactly. Cool. Okay, we got 9 seconds left, Justin. So you gotta make this one quick. With community, you guys have the Ninja community. I see them everywhere on Twitter. They're amazing. I see the emojis everywhere. Talk a little bit about your Ninja community, how you grew them, how you continue to get them excited about RWAs.
Quick point. I think it's really. I'll make it quick for you. 2 points really. Number one, you gotta know who your audience is. You can't be putting out medium content for people on Discord. You can't be putting out medium content for people on Twitter. You got to know how to simplify things down for people to understand, hey, what is this product going to do? Dumb it down, explain like I'm 5 to people.
Yeah, I'm pretty
I
much
think that's
5.
something that the marketing team from our side has done an amazing job with. Second point being, you have to understand that at the end of the day, community building happens only when there's ups and downs. There's no community when it's up, there's only a community when you're down. And to JP's point, when your token goes all the way down, and it comes back up, that's when, in my opinion, you actually built the strongest community ever. So what we've done with the Ninja community is we sort of have an ambassador program. Happy for you guys to just type Ninja ambassador program. You'll be able to see where we encourage them to interact with the applications on us, let's say the Ondos on us, and we incentivize them by then distributing some form of rewards to them on a monthly basis. And that's what we've been really been able to do. But the last point being, you just got to make it accessible for people. So making sure that, hey, we have a sign up call to action button on the applications instead of connect wallet button. Making it sure that when people come to your page, immediately they know what the next steps will be. So that's how we build the community, in my opinion.
Yeah, I think that's actually very relatable because, while you guys have your ninjas, like at Plume, we have our Plume Goon community. We are the goons here, and when we launched our goons, we didn't expect it to go so famous. We, for our testnet campaign, we got 1 million goons that were minted out, and they have been kind of like the core of our community now. Without the goons, we wouldn't be here. There'd be no one in our testnets. But we have over 3.5 million wallets. It's each month. There's 238 million transactions. There's a lot of things that are going on, and that's really just because of our goons, and they love of us and kind of what we're going for, which is really trying to make Artabase more accessible to people. You think Artabase, it's usually just tokenization or just TradFi folks, 50-year-olds in suits that are just bringing something on chain. But we're really trying to make it more crypto native, more crypto flavored, and just making it a little bit more fun. I think with that being said, this is kind of the end of our panel. Hope you guys all enjoyed it, and thank you again for our lovely teams here. And if you guys want to say any last words, feel free, but I think that's it. Thank you guys.